On the trade front, is there anything that you've heard in the last week or so that makes you reassess your view of how close or how far we are from a trade deal between these two sides?
Right. We still believe a deal is better than no deal. Yeah. And in all aspects, likelihood is that China-US will come together to sign a deal. How exactly that deal contains and or how that have implications for both Chinese and American economy, I think the eyes seems to be on Chinese side. In other words, I think China wants to have a deal, wants to move on from rather have this kind of tit for tat or tariff punishment, all that kind of thing. But China right now is quite determined to open its own market. So many of the things that U.S. wanting to get out of the deal, China, it looks like, is carry out anyway, and under the broader banner of further reform and open up, right? I think we see that in financial markets. With us become the first 51% majority control, the likelihood of a few more, and then later on, even more, half dozen or even more foreign firms will come to China with a majority ownership. Among those, there will be American firms for sure. So I think from all that perspective, China seems to be determined to carry forward the kind of reform and open up. Because fundamentally, these further reform open up are good for China. Chinese economy and especially Chinese financial markets will do very well with more and more foreign and international professional investments coming in, basically.
Now, your CEO, Sergio Amotti, spoke about a pretty gloomy environment for the first quarter, saying it was one of the most challenging environments for investment banking in the first quarter that he's seen in a long time. Does that gloom, are you seeing that gloom in China as well?
Actually, in a way, China, as we usually refer to, from a currency fluctuation, from a lot of things area, macroeconomic, China is still to some extent insulated from the rest of the world. Not to say the interdependence of Chinese and global economies, but insulated primarily because a lot of the capital accounts opening is in graduate form rather than big bang type of opening, right? So from that standpoint, then you have the Chinese side, the government precisely aware of the macro external pressures and headwinds. They started more during these two sessions recently. They started more tax breaks, the reduction of the administrative fees and et cetera, and the VAT reduction and other things will hopefully go directly, meaning more corporate investment, potentially more jobs being created. So from the Chinese economy side, we don't see that kind of gloom. I mean, slow down, yes, but still we're talking about between 6 and 6.5%. On the capital markets front, it's more interesting. Chinese now emphasize more to have the financial markets directly or indirectly serve the underlying economy, such as for the tech board IPO launch that literally happening now. I think here you will see more relaxed Chinese IPO rules and also bring China back more on par with the global IPO market in the sense that the issuers or potential applicants for listings were free to put forward their application with the sponsors from local and international firms such as ourselves, so that ultimately it's the market and investor will decide which company will successfully complete IPO, and hopefully after IPO will continue to deliver value, generate value for shareholders. So I think on financial sector-wise, China will see more opening, and as a result of the pressure from externally and internally, we believe there will be more opportunities for us.
Well, let's just pick your brains a bit more about the Shanghai Stock Board, the Shanghai Tech Board. In terms of the Shanghai Tech Board and the IPOs that we're expecting this year, how much involvement are you likely to get? Are you beginning sponsoring a significant number of those IPOs?
I think it's hard to tell how many of the IPOs under the Tech Board IPO will come to the market, but safe to say we have participated from the very beginning when the whole idea was being generated and consultation were taking place. Remember, we've been an active participant in this market for the last 12, 13 years. So we obviously participated very actively. We are also working on a couple of live deals, if you like, under this banner with our chosen client. where I think we will play the holistically integrated investment banking and sponsor view roles. Those including from doing the due diligence, sponsor the IPO application, right through to the research and then marketing and ultimately market making or brokerage service after the IPO. So I think we're quite looking forward to this new market opening, because other than the tech board IPO, which is just another sector or several sector segments focused new economy companies coming to the market, there's so-called the IPO through registration, which is basically a market-determined IPO mechanism that is being introduced back to the Chinese Asian market, which hasn't been practicing for quite a few years, right? When IPOs were administratively vetted by CSRC, who took a view on the market front almost to say all the IPOs has to be priced at a cap of 23 current year PE ratio. Right? So this time, we're going through the tech board IPO, we're going to be able to exercise again market-based roadshow, book building, and then let the large institutional investors working with the issuer to jointly determine, of course, sponsor will play a key role to decide and determine the right pricing for the IPO issue. Therefore, hopefully, the secondary market trading will tend to be more steady rather than what you see in China typically, the pop-ups of 10% on a consecutive 10 days or 8 days.
So how many clients are you working with who are looking to list on the Shanghai
We're working on
board?
several of those clients right now, and we looking to onboarding more clients under this tech board IPO initiative.
So a significant impact on UBS China
revenues. I would
forward.
say it's definitely welcome a new avenue of new businesses, right? New product to some extent, but I think as business as usual is just another new groups of IPOs. But more significant, as I said, is the way how IPO are being done in China, and we feel firm like ourselves can play into our strength.
Well, I'm interested in how the ban that you're seeing in Hong Kong around the sponsorship of IPOs, how does that affect the China business? Does that mean that it's more of a catalyst to get involved with the IPOs on the Shanghai Tech Board?
No, it's not. It's that is already resolved. It's a legacy issue. So we look forward to serving clients in Hong Kong as well. But in China, it was never an issue because those legacy issues were constrained or only confined to Hong Kong market only, and only to the sponsor license that we are still free to do many other fundraising exercises for clients in Hong Kong. So we look forward to continue serving clients in Hong Kong, but in China, which is always a market we focused on for the last 12, 13 years. So we'll continue to focus on domestic IPO market as we always have.
And you've talked about the opening up of the capital markets here. We've of course seen some pretty strong upside for A shares since the beginning of the year. Do you expect more momentum, or are you starting to see that cooling now for Chinese A shares? What are you looking at in terms of targets?
I think A shares has had a good run since beginning of this year. It's been actually gone up by our estimate about 25-26% already. When we forecast the late last year that this year or the whole year of 2019, Asia could have seen an upside room of say 20 or 20 plus. Some people didn't believe us. Now it's kind of got it already overshoot if you from that standpoint. But we believe that Asia valuation is still not quite as demanding. We're talking about a 12.5 times for the large indexes constituent stocks average PE, and that's just reaching around last 5-year average level. So we would say right now Asia is probably in a good place, but it could either go up or could go down in the short term for technical adjustment purpose. So we think the Asia could be trading between the range of say 3,000 to 300, 3,300, 3,400 kind of range. And we see this year we're still with the new initiatives such as Tech Board and other things. I believe that there could be some more catalyst of this market perform a bit better than, certainly much better than last year.
And part of it is we've seen some northbound flows picking up quite strongly as Hong Kong investors try to get involved in the A-share market. Is
Absolutely.
that something you expect to continue and be sustained?
Yes, it will, definitely will. Because if you look at by the end of last year, foreign investment accounts for a total of 6.7% of the free flow market cap of China A-share markets. That's already quite significant. That's about a 3-fold increase compared to 2015. So within shorter period of 3 years, foreign capital has come in 3 times bigger than, say, 3 years ago. with the continued momentum of MSCI, is forecast to increase the weighting for domestic Asia stocks from 5% ultimately to 20% by the end of this year, by November 2019. We see a major inflow in the process. We estimate about another 65 to 70 billion US dollar worth of foreign capital will have to come in to track the index increase of the weighting. So you will see more foreign capital coming. Plus, China is already relaxed, will continue to relax the foreign ownership rules for the listed Asia stocks and companies.